Hello students, Assalamu alaikum. Today we have to complete our paper we left last time, day before yesterday. Just because of my internet failure, I couldn't complete the paper. So let's see. Here is your paper. Yes, it is. It is there. Uh, October, November 2021, paper 22, 7707, O-level accounts. We were there with the. Okay. What I forgot is to start tools. Here we are with our tools. Inshallah, we'll complete it today. Inshallah. Yes, it was supposed to be completed the day before yesterday, but couldn't make it uh, because of the internet failure, sudden internet failure. Okay. So here we are. Control account. Question number 2. Question number 3 also. That was manufacturing account, income statement, trading part. Now we have to. Now, provision for doubtful debts is an application of each of the following accounting principles. Matching principle, yes, we have to match the expected loss of the year with the revenue of the year. Okay, and prudence is, prudence concept says that be alert for expected losses of future. That's why we maintain bad debts, provision for bad debts. Okay. Now, question number 4. Nikita is a trader. The totals of her trial balance at 30th June 2021 did not. Debit exceeds the credit by 2,600. Nikita opened a suspense account. Okay. The following errors were later discovered. That's what we have to do. Now, what happened? The thing is, insurance of 2,500 had been entered as 4,500 insurance account. The correct entry had been made in the cash book. The payment from the cash book was shown correctly 2,500, but it was entered in the insurance account as 2,500, 4,500 instead of 2,500. So in that case, what we have to do, we have to make a rectifying entry for insurance. Okay, we have to reduce the insurance expense account. Now the total of the discount received on the cash book of 500 will debit to discount amount. Now, when you debit discount received, it means you have to credit discount allowed first. Then you have to credit discount received as well because it is originally not credited. So you have to credit two things: discount received and discount allowed. And trade sale to Kajal and we collected this sale but debited as 1,000 in Kajal's account. Again, you have to increase the Kajal account by 400. A check of 700 received from Anisha had been correctly entered in the cash book but credited to Aisha's account. So that is actually error of uh, principal. No, sorry, error of commission. Getting my point? This is actually error of commission. Are you getting my point here? This has nothing to do with suspense account. So what we do, we are going to the question and we'll see. Error number 1. Narratives are not required. So that's very good. Okay. Error number 1. Done. What is error number 1? We have to reduce insurance expense account. So insurance expense is a debit account. When we reduce it, we have to credit it. It means we have to debit suspense account. Suspense debit and insurance. Credit 2000, that 2000. Now, second entry, second error. That was the error of discount receipt. Okay. Now, in that error, again, we have to debit suspense because we have to credit two discounts. Discount amount and discount receipt. Both should be credited. Okay, that was the amount was 500. 500. 500. And we have to debit suspense with. Now, error number 3. Error number 3. In this error, we have to, the error was cashier, Kajal. Kajal was debited by 1000, but the sales was originally of 1400. So, what we have to do, we have to debit Kajal with how much? 400, and we have to credit system. Done? Okay. Error number 4 was actually the error not affecting trial balance, that is error of commission. So we were supposed to create Anisa, we will create Aisha. So what we have to do, we have to debit Aisha and we have to credit Anisa. The amount was 700. Getting my point here? So this is how to we rectify the entries. Now, okay. Now move to the next question. Sorry, next part. Okay, we have to make a suspense account. Getting my point here? We have to make a suspense account. So these errors were made on 30th June 2021. So 2021 June 30 balance brought down on the credit side. That was how much? $2,600. $2,600. Now the same date. The date would remain same throughout the T account. 2021 June 30. Now in our first entry, what we did, we debited suspense. So yes, we have to debit suspense by 2000, and the reason is insurance. Now in second entry, again on 30th June, we have to debit suspense with two discounts. So we will write discount allowed, and amount would be 500, and again on 30th June, we have to write, yeah, discount receipt. Now next is we have to credit suspense account by 400 for Kajal. So what we do, 30, and we have to credit suspense account for Kajal, that is 400. So altogether we have now what we have to do. Here, this is 3,000 and this is both side. There should be no closing balance. Got it? Suspense is done. What next? Complete the statement to show the effect on the profit for each of correcting errors. Where the error does not affect profit, write no effect, calculate the correct profit for the year. Now, profit for the year before calculation, before corrections. Now, cost 28,000, increase in profit. Error number one. Error number one will increase the profit by 2,000 because you are decreasing your expense. Error two is also increasing the profit because you are decreasing an expense of discount allowed and you are increasing an income of discount received, that is 1,000. So again, increase in profit for 1,000. Getting my point clear? That's it. Error number three has nothing to do with, so we will write here no effect. And error four is not going to affect the error. Obviously, it's only an error of commission. So your profit is increased by 28 plus 3, 31,000. So we write over here 31,000. Done? Gone. Okay. Simon is a business selling office stationery. On 1st January, he owned 2 delivery vehicles which had been purchased on 1st January 2018. Delivery A had a cost of $30,000 and delivery B cost 25,000. Simon uses straight line method of decreasing delivery. A rate of 20% per annum cost is used, with the rate being applied for each part of the year for which the delivery vehicles are sold. Due to a decline in business, delivery B was sold on 31st March 2020 and a check for 10,050 was received. Delivery A was still in use at the end of 2020. Complete the following table accounts for each of the years ended 31st December 2019, 20, and 22. Balance account at each at the end of each year. Now we bought this on 1st January 2019. Now on 31st, no, again, yeah. आगे यहाँ पर आएगा दिसंबर बैलेंस करेंट December 31st 2019 and December 31st 2019 balance carried down 55,000. Now okay. Now that was 1st January 2019. Okay. December 31st 2019 we close it. Done. Now what we have to do 2020. Now we have 2020. BD. Now in March, March, March 31st, we sold one of the machine. So we send this machine to disposal account. Which machine we are selling? The one on we bought on 26,000. Yes. Delivery will be 25,000. This is 25,000. Set to disposal now. December 31st, 2020. We have balance CD. How much is left with us? CD 30,000. So both the sides we have now. On, please don't forget to do this. On 2021, Jan 1, balance VD is 30,000. If you don't write this balance brought down, you will get 1 mark detected for your presentation. Yeah? That's all for should account. What's next? Provision for depreciation. The opening balance of 2019 was 11,000. Okay. Now, because we are using a straight line method, it means every year, the depreciation would be same. Okay. Now, December 31st, 2019, the transfer to income statement would be again 11,000. That is very easy. Are you getting my point clear? Because he is using straight line method. Now, 2019, December 31st, balance CD is 22,000. Done? So, totals on both the sides. Is 22,000. Here you write. Done? Now, yeah, 2020, Jan 1, balance brought down. How much? Done? Okay. Balance brought down 22,000. Now, what we have to do in 2020, 2020, we have to be careful. Why? Because we sold one of the machinery on 31st March. Sorry. March. we have to send the provision for depreciation to disposal. But for sending it to disposal account, we should know how much was the depreciation of first machine. Now, the machine cost was the cost of machine, cost of cost of machine B is equal to dollar 25. Done. Now, uh, annual depreciation using straight line method would be how much? That is, I think 20%. Go back to the 20%. So 25,000 multiplied by 20% is equal to 5,000. Done. Okay. 2019 depreciation was $5,000. So 2018, that was purchased in 2018 depreciation was 5,000. 2019 depreciation was $5,000. 2020 depreciation for 3 months. So 5,000 multiplied by 3 upon 12 is equal to how much? So what we have to do, we have to calculate 5,000 multiplied by 3 1,250. Because it says that depreciation will be charged for the months of ownership only. If you have kept the machine for 3 months, you have to calculate depreciation in 2020 for 3 months. If you have kept for 1 month, you will have to calculate depreciation for 1 month. So what we do here, the total depreciation of this machine is 5,018, 19, 5,000 and 1250, 5, 5, 10, 12, 11,250. The total depreciation of this machine is 11,250. That is going to be the disposal account, 11,250. Okay. Now, on December 31st, while computing depreciation, December 31st, computing depreciation or transferring it to income statement, we have to be careful about we have to take that machine. What is the cost of the machine? 30,000. So its depreciation is 6,000, and 1,250 was the depreciation of machine B for 3 months. That would make your total depreciation 7,250. 6,000 for machine A, and the 3 months for the machine B for March, 3 months for 2020 for machine B, 1,250. So total this year's depreciation for A and B is 6,000 for A and 1,250 for B. And now we have to calculate balance CD. So what is the amount of balance CD now? CD. So it's now easy to calculate. 22,000 plus 7,250. 7,250. The answer is 29,250. 29,250 minus 11,000. So the balance is 18,000. Balance CD is 18,000. So what you have to do here, you have to take right here 18,000. Done. So here we'll write That would be 29,000. Obviously, yeah. Please don't forget to do this 2021 and one BD. Done. Okay. Now next. Disposal account. Okay. Disposal account is easy. 2021. So it should be that was for 2021. 31st. $11,000. Now we sold that machine for how much? 10,350. So we received in bank 10,000. See, calculate. Now 25,000 is the cost minus 11,250 minus 10,000. 3,400 is we are suffering, or we are sustaining loss on disposal of. So we write here 31. Yes, 3,000. So altogether now we have 35,000. Now, Simon's sister Yasmin also in business and depreciation driven by usual. Simon's invited to apply the reducible method of depreciation to his degree and whether he should apply the reducible method of justify your answer. Now, in this question, what we have to do? Ah, we have from this class. You know that here what you have to do, you have to write advantages and disadvantages of and uses of methods. See, I think for all those assets who are efficient in the beginning, like machines, generators, automobiles, equipments, electronic items, they are very efficient in the beginning years. So diminishing balance method is, I think, best for them because efficiency is very important matter for these assets. Now, furniture, fixtures, um, they are mostly these assets are not non-efficient assets. They depreciate with the passage of time. So I think straight line method would be useful for those assets which do not have efficiency. All assets who are efficient, it will be very good for them to be depreciated by using the diminishing balance method. And diminishing balance method gives you more tax shield in the beginning years of business, where you are establishing yourself and you have to avoid taxes using depreciation as a tax shield. Okay. So that's all for today. We have completed our paper. Uh, and I'm trying my level best, inshallah, to complete all November papers. Some variant, inshallah, this week. So remember me in your prayers. And if you have any problems, any queries, just leave a comment. I'll try my level best to answer all your queries. Inshallah. Take care. Allah Hafiz.